Hi guys, and welcome to the very first Technical Tuesday episode. I've thought about doing this for quite a while now, and I'm going to try to put out my stand on the market, everything I'm looking at on a Tuesday, and hopefully you agree with it. If you agree with it, leave a comment and we can discuss it. Okay, but today I'm going to show you guys how I'm going to analyze the CHFJPY chart, and as you can see, this is on a daily time frame, and we are currently against a really strong resistance area, so we can expect some sort of movement in this area. As you can see, let's just visualize it a bit. I'm going to draw a rectangle from the top of this week all the way through to the closure of that body. Just let's just make it a nice box like that. As you can see, from the week high to body closure, I just like to draw my resistance areas like that, just to remind myself that resistance isn't just a singular price, it's a range like this, from 14.4 to 14.1. If we zoom out again, you can see this was the first time price tested this area, and you can see this movement over here. Then price retested it, and look at this aggressive candlestick from the resistance area, and it's a big move to the downside. Came back, almost tested it again, then followed by another move. So this whole area here is a hot zone for price movement, and more recently for June, it came and tested it, made a new high, and then price rejected this area and it made a reversal. Tested it here again on the bottom again, and we are again at this area. As you can see, each time price has tested this area in the past, it followed with a sell-off. Tested, sell-off, tested, sell-off, almost tested, sell-off, tested, sell-off. So what we can expect is, based on the previous price movement, we can expect some sort of sell-off to happen, maybe to these levels, maybe to these levels, and we're going to find out our price target later in this video. If we go on to a weekly time frame, you can see this extremely bearish pin bar candle over here, and that usually it broke through the resistance. As you can see, it made not an all-time high, a recent high. It made a high than this, and then as soon as it made that high, it got a strong rejection downwards, and it closed below the close of this candle. So that's a strong bearish signal, and the higher the time frame, if the signal is on a higher time frame for like this on the weekly, then it's usually more accurate indication of the trend. But nothing is certain in trading. Okay, the game plan, how I would approach this is, I know we are at the resistance area. I can look for some sort of support area, maybe to find our initial target, and my eye catches this area over here. It's been tested once and more throughout, so I'm also just going to draw another rectangle, just like that. Trading view and there alert, sorry. Okay, so this is the resistance area, this is the support area. It's been tested there, it's been just hovering around this area over here, tested again here, tested again more recently here. So what is likely to happen is we can expect a rejection at this resistance area, and price can test the support area once again, or it can just go higher if it decides to do it. Nothing is certain in the market, and technical analysis is just based on past performance, and you create your trading plan around what happened in the past. And if you do that a number of times and you develop a statistical edge over the market, then you will become a profitable trader. So I believe most traders see price either being rejected at this area, seeing as it's been rejected so many times before, or price can just finally decide to break through and continue a lot higher. And if you go back to the weekly, maybe even continue on to test these highs or these highs over here. Price loves testing old price areas in the market, like these. So if it breaks past this resistance, then I would say there's a really good chance that price will continue maybe to this level or to this level, and then we can have a seller from there. Or price can just reject this level, maybe test this support again, and it can even continue down more downside to these levels over here, or even to these levels over here. So that's the name of the game of trading. It can go either way, but if you have a strong enough trading plan and you have a statistical edge over the market, then you shouldn't worry about each scenario. Whichever scenario happens, you should trade around it. If it breaks past this resistance, maybe you can maybe expect a retest, breaks past, maybe a retest for you to continue the trend higher. It's always important to follow the trend. The trend is your friend, like to say. So you can expect this, or you can expect a move lower. I'm currently looking for a move lower based on this weekly candlestick, and knowing that price has been rejected so many times here. But I'm not gonna make an optimistic target area. I'm gonna keep it tight. I'm gonna target this closer support area. I'm not gonna be optimistic and target this area over here. It's important to be realistic when you trade. You shouldn't be too greedy. You should know when to enter and exit the trade, and you want to be in the market not any longer than you absolutely have to. So let's dive right into the 4-hour time frame to do some technical analysis. The support and resistance areas was just the initial analysis. Now we're gonna get in some more technical stuff. Let's draw a trend line like that. The goal of any trend line is just to make sure it touches as much areas as possible. Some people draw their trend lines like this, where it touches the weak bottoms, and that's fine. As you can see, then price recently tested the backside of this trend line. I personally like to connect my trend line to where the candlesticks closed, because that's to me a more important price level to look out for, because that's where price closed. So this is a decent trend line, and you can even clone it, make a clone and try and fit it to the top. And this is a bullish channel, because it's making higher highs, higher highs, higher highs, higher lows, higher lows, higher lows. as you can see here, it breached the bottom of the channel, and it's an aggressive move to the downside. So you can see price wants to move a bit to the downside, and that's what we expected at this resistance area. As you can see in the past, it rejected this area, continued to make a move lower, again rejected lower, so we can expect something like that. And this is just some added confluence that it broke out of this bullish channel, and it's an aggressive move to the downside. As you can see, all of these bearish candlesticks, and then it's slow moving upwards. It's overlapping. The candles are small, so that's mostly from traders taking some profits, or the money movers, the big financial institutions, just edging the price a bit higher to enter at a better price for a move lower. So that's one thing. We are at the resistance level. That's a confirmation that we can expect to move lower. We are underneath this bottom of the trend line. That's another confluence. This is an aggressive move lower, overlapping upwards. So it's safe to say the momentum is starting to turn a bit to the downside. As you can see here with the moving averages, the 8 moving average crossed below the 21 moving average just shortly, just above here again, but as I said, that is just some overlapping over there. And if we use the FIB tool and we use the swing high to the swing low, it broke past the 61.8%. It's still beneath the 78.6%, and for me personally, I like this area of the FIB between the 61.8 and the 78.6 area. That's a good turnaround point for me in my experience. And if how to create a trading plan with this is, sorry, I just saw another, it also tested this intraday support then resistance area. Just if you draw it like that, just test it to the pip. So that's another confluence. And the thing with trading is when you start to add confluence on confluence on confluence, all pointing to the same direction, you just start to add confidence to your trading plan, and that also gives you confidence to take the trade and to hold it as long as you can and to risk your certain percentage. Anyway, I would say it tested this support area and immediately it got rejected. If you just go to a 1 hour time frame, this is also looking good. It's made a bearish spin bar, so that is usually a trend reversal candlestick. So my approach would be to put in a short just at the bottom of this candlestick over here. Stop losses, I would put my stop loss above these more recent highs, and I would just make sure that the stop loss is above all of these highs as well, just to be safe, because sometimes the market searches for liquidity and it can spike higher than this area and then continue to move lower. So I like to keep my stop loss above as many swing highs as possible, and that would be sufficient stop loss over there. It's above all of these highs. And if we go back to the 4 hour, then just my target, I would target this, maybe this next support area over here. and as you can see, that's basically a 1 to 3 risk to reward. If you risk $100, you have the potential to make 300 back, and that's a very good setup in my opinion. And now we just wait. Now you can just enter the trade, you can monitor it, just place your stop loss, just place your take profit areas, and then don't overthink it, just walk away. The market's going to do what the market's going to do. If it hits your stop loss, then just reassess it, maybe get a different entry point higher at these resistance areas over here, and just let it be. Let the market do what it does. And as you can see, it's already starting to move a bit to the downside over here, so I'm going to jump into this trade right now when I close this video. So that's Technical Tuesday. That's the first Technical Tuesday, and hopefully you guys can learn something about this. And when I see something in the market, I'll keep you guys updated. And it's just important to remember, trading, in essence, trading really isn't that difficult. I would say in my personal experience, the emotional side of trading is where most traders, me personally as well, struggle with. Everybody can draw a trend line, everybody can draw Fibonacci support and resistance areas, and the tools isn't that hard to learn. If you guys put in the time, put in the effort, anybody can trade. And what makes the difference between a good trader and a great trader is not to allow your emotions to dictate your trading, just to let the market do what it does. The market isn't against you. The market is just going to do what it does. And like I said, if it stops me out, I'm going to reassess it. Maybe the market is decided to go higher, then I'm going to look maybe for some long entries till here, then with the stop loss below this resistance area. So for now, I'm happy with this short over here, and if you guys like the idea, just leave a comment down below, and I'll catch you guys in the next Technical Tuesday. Thanks for watching.